Insurance professionals work hard every day to keep people safe. But as technology transforms the industry, how can insurers protect not only their clients, but also themselves from ever-changing cyber risks? My name's Elizabeth Blossfield, and I'm the host of the Insuring Cyber Podcast, a bi-monthly look into how the world of cyber and the business of insurance are connected. Hi, everyone, and welcome back to the Insuring Cyber Podcast. For our last episode in January, we have another great guest to discuss what's ahead for the cyber insurance market in 2024. Arctic Wolf and Cyber Risk Alliance recently released their Cyber Insurance Outlook report based on the findings of a survey of more than 500 IT security professionals. Kevin Kiser is the Senior Director of Insurance Sales at Arctic Wolf, and he's speaking with me about the growing need for cyber insurance, the evolving cyber threat landscape, and more of the survey's findings. So I'll bring him on now. Hi, Kevin. It's great to be speaking with you today. How are you doing?
Hi, I'm doing great. Thanks for having me.
Yeah, thanks for taking the time. I'm really looking forward to our conversation and kind of diving into the survey a little bit more. But just to start off, I was wondering if you could give a brief overview of who you are and the work that you do at Arctic Wolf.
Yeah, absolutely. So hello, Kevin Kiser. My background is a mixture of technology and insurance. So I spent my early career at a solution provider, more working with data center equipment and communications equipment. And then for the past roughly 10 years, been in the startup world, including an insurtech brokerage. So kind of mixing insurance and technology. And that led me to Arctic Wolf. Arctic Wolf's mission is to end cyber risk. And we know that organizations can do a lot of mitigation of that cyber risk, but they can't mitigate everything. So we have a very intentional strategy working with insurance brokers and carriers to help customers ultimately both mitigate risk and transfer risk with the insurance providers to ultimately meet our mission of ending cyber risk. So a lot of my work is working with those brokers and carriers to help our customers access different insurance programs that meet their risk management strategies.
Well, that's great. Yeah, I love your mission. I love the work that you're doing. So I'm excited to dive into it a little bit more. And I know you just recently released the Cyber Insurance Outlook report. And in the report, it found that more than 70% of respondents said their organization has a cyber insurance policy, but more than half of that group said their coverage just started less than a year ago, which surprised me. So I was curious if you could talk about what you think is driving so many newcomers to the cyber insurance industry and whether you expect the number of insureds to increase this year.
Yeah. And the way that I think about that, the survey and the report is it's kind of the voice of the IT stakeholder. So the respondents were primarily IT directors, executives, VPs of IT at organizations. And like you mentioned, I think a lot of the impetus or the drive is the changing threat landscape. And all the different things that we've seen over the past couple of years, really anchored in kind of the triple extortion items. And if you want, we can go more into those types of things. But what is the outcome of that is this consensus that it's not a matter of if something's going to happen, but when an organization is going to experience an incident. As I get out and talk with customers, that's a growing consensus, right? That's true. And that's led then into, I think we've seen regulatory shifts, like the SEC changes, right? So there's more regulation that's coming into play. And then that's trickling into the board meetings and at the C level, we're seeing basically a standing topic of cybersecurity and what organizations are doing to mitigate that risk. And we're even seeing compensation changes at the C level around downtime as an example. So C level compensation tied to certain security initiatives or outcomes. And then I think the one of the other drivers is contracts. So more and more organizations are adding cyber insurance as a requirement in their everyday business arrangements, business contracts. So in order for me to gain a certain partnership or become a vendor of sorts to an ecosystem, I need to prove that I have cyber insurance. So all of those different types of items, whether it's the threat landscape, the board level discussions, the C-level compensation, the regulatory changes, or the contract requirements, all of those are driving organizations to learn more about cyber insurance and ultimately become policyholders.
Yeah, that makes sense. And those new contract requirements, requiring you to have cyber insurance, is a really interesting point as well, because you can see how it's becoming much more important. And I know you mentioned a really important point that it's not necessarily a matter of if, but when an organization might face a cyber attack, which is making cyber insurance all the more important. And even though it seems like businesses might be purchasing more coverage, there are still some hurdles. I know that your report found that cyber insurance carriers are exercising more due diligence, requiring more of their insureds in order to grant coverage. Premiums are also rising. So I was curious, what factors do you think are leading to these premium increases and for some of the hesitation among carriers? And do you expect that that will create more challenges for businesses seeking coverage in the new year?
Yeah, it's a great question. And I think the natural driver of the increase in eligibility for insurance around security controls and the rising premiums are a result of claims, right? So when we look at the claims history, or perhaps a good indicator is the loss ratios from the NAIC reports, over the past several years, that there have been an increase in losses kind of during that 2018, 2019, 2020, 2021 period, from a cyber insurer perspective. And of course, the rise in claims is going to cause insurers to look more critically at what are their requirements of applicants in order to be eligible. And I think the driving threat landscape, or the changing threat landscape, is ultimately moving some of those goalposts as well. So from our perspective, when we look at our incident response reports, so we work a lot with insurers, and our incident response team goes to work helping clients recover from catastrophes. The root point of compromise of many of those attacks, at least from our information, about 76% are caused from external vulnerabilities, as an example. So as you can imagine, if many of the claims are being caused by external vulnerabilities, that will cause the insurers to add things like vulnerability management as a requirement to purchase cyber insurance. Does that make sense?
Yeah, that makes a lot of sense. I think this is so interesting, talking to people like you who work with clients to sort of mitigate their cyber risk. Just learning what some of the biggest factors are that contribute to, cyber vulnerabilities. So can you talk about some of those external vulnerabilities that you're seeing, and how companies can sort of work to mitigate them?
Yeah, and I think I think the number one thing is most of the vulnerabilities that become a root point of compromise for an incident are things that most organizations in the security community are aware of. They're regularly published by the different types of vendors, so whether that's Microsoft or other types of software providers, as an example. And a lot of it is anchored in the organization, the end organization, understanding what those vulnerabilities are, and then dedicating resources to maintaining patch management for those types of things. So a lot of the vulnerabilities that we see as the cause of different incidents have been known for sometimes many years. It's just a matter of the organization having enough resources to maintain effective security patch management over time.
Yeah, I think this is such an interesting conversation, and I sort of threw that in as an extra question. So I appreciate you sharing some of that with me. I always think it's fascinating to learn about that stuff. And, sort of getting back to insurance, given some of the stricter due diligence that carriers are doing, what are some of the protocols that businesses should have in place when they're seeking cyber coverage, or, what should they consider to make sure that they're granted the best coverage possible?
Yeah. When we work with customers and insurance brokers, a lot of that discussion is kind of anchored in there's your IT controls and your security controls, and you can kind of look at that framework from an underwriting perspective. What are the things that will help reduce the severity of an incident if something happens or when something happens? And then how do we focus on the controls that will reduce the frequency of something happening in the future? So I'm sure, I know in your other podcasts, folks have talked about MFA as an example. So in IT control, having MFA in place, certain backup strategies like snapshots will assist in reducing the severity of an incident because you can recover and restore more effectively. On top of that, like I mentioned, the external vulnerability scanning and management, those are certain items that will help reduce either the severity or frequency. Incident response planning and working with your insurance broker, IR firm, privacy law firm to run through different tabletop exercises really help reduce the severity as well. So when we take a step back, the client should be working with their insurance broker to understand what are the things that we can do to reduce our severity or frequency, and then working with the broker to effectively tell that cyber maturity story to the insurer is very effective. And I think that's something that the IT stakeholder can do more of, is work with their CFO or risk manager and the insurance broker to have a more collaborative conversation around, here's what we're doing from an IT and security perspective, and here's how it impacts frequency and severity. And then the broker and the team can help tell that story to the underwriters.
Yeah, that makes sense. Having that communication and collaboration is so important. And those are all helpful steps for companies to consider when seeking cyber coverage. And I know we've talked about rising premiums and how, carriers are exercising a little more due diligence. Are there any other ways that you've seen cyber insurance coverage evolve over the past year? Or, what do you expect for the industry in 2024?
Yeah, there are a lot of different things, but I think I kind of anchor in the transition from evaluating individual security controls to evaluating different types of maybe security partnerships and IT partnerships that the organization might have. So as an example, when we look at the history of IT, a lot of it has been rooted in like endpoint, and that's probably a confusing word, but point solutions, meaning I'm going to buy this tool and it's going to do this particular thing for me. And as IT and security gets more complex and integrated, there are larger solutions that are, again, more integrated and comprehensive. And I think that's where having some of those dialogues with the IT stakeholders around what investments are made holistically in my security partnerships, or the whole portfolio of tools, rather than asking kind of these check the box questions, looking for point solutions. I think there's a underwriting is starting to shift towards more strategic partners and evaluating the bundles of solutions that an organization has, as opposed to just looking for kind of point solutions.
Yeah, that makes a lot of sense. And that's a conversation we've had a lot on this podcast, kind of getting away from those check the box exercises and having real open conversations with your insureds about what they need. And then, we've talked about so much. This conversation has been so helpful, but I'm curious, kind of overall, given everything that we've discussed, what's one final piece of advice that you would leave with insurers or insureds, I guess, or what should they be thinking about regarding navigating cyber risk this year?
When I look at the different stakeholders in the conversation, we have the client, the broker, and the insurer. And I think at the client level, the IT stakeholders and the risk managers, the finance teams, can collaborate a lot more going forward to really evaluate the risk management strategy of the organization. And like we talked about at the beginning, it's going to be a blend of risk mitigation and risk transfer. So I think we've been seeing more of those conversations, which is fantastic. But when we look at our core IT stakeholder, they're looking for some advocacy and collaboration with the risk management team to dive more deeply into their investments. And then from there, working more collaboratively with the insurance brokers so that they can understand what investments are being made in the organization and how will their security maturity progress over the policy period. And then going to underwriting with kind of that collaborative story and fitting that into that framework that we talked about around minimizing severity and frequency. I think those are the natural steps that I think each of those stakeholders can take in improving the collaboration and ultimately reducing the losses in the chaos over the coming year.
Yeah, that's really great advice. And it sounds like collaboration is the word of the year for 2024. So that's a good piece of advice to leave us with. And thank you so much for taking the time to speak with me. I really appreciate it.
Yeah, absolutely. Keep doing what you're doing. I totally agree with kind of your tagline around bringing technology and insurance together. So I love your mission, and I look forward to talking again.
Oh, thank you so much. I appreciate that. Yeah, thank you.